Good day. Ira Epstein with your metals market update for Tuesday, the 8th of October, 2019. Well, folks, here we are pushing the 420 time frame. And while you see the gold down a $0.50, and that's the formal close, 1503.90, the last trades of the day were at 1510. Silver was pushing the 1780 level. The stock market was where you see it at this point. Energy prices, I think, were down a little from there. It's been an active day. You had the U.S. slap today some, how do I say this, visa requirements on different personnel from China. And these are the people that are in a province that we think is now treating certain people right, and I'm saying the U.S. We saw Fed Chair Powell talk today, and they're going to be increasing the balance sheet. They're going to be buying securities, but they're not calling it quantitative easing. This is an environment made for the gold market. We'll see if it comes alive. We're supposed to have the Fed minutes tomorrow, which we will get, but it's Thursday that I'm concerned about with all that's going on with the Chinese, if you will, suspending the NBA this week in China. If you'll talk about the visa requirements that we just slapped on, why are the Chinese coming to the U.S. for this trade deal? It appears that each of us are slapping around the other country, and it's going to make for a difficult environment. I have little expectation for the meeting to be taking place. I just heard that the lower level delegates from China are in the United States. I don't know that the higher level ones that are coming in will make it. We'll find out. That's just my own opinion. When you're looking at a weekly gold chart, I see a consolidation pattern. This market has been consolidating for quite a while here after it got to 1526.60, and the time frame on that closing week, by the way, was August 23rd. So we're almost about, 6-7 weeks from there. We've been drifting in this market. You can see the pattern. I think the market is waiting to see, can it get through this number? You're going to say, well, Ira, it doesn't have to go through there. What if it gets through here? And I'm agreeing. Gets through 1462, I'm thinking the wrong way in the market. But what I'm looking at is how the market has got the pattern of lower highs, lower lows, and I know that the market right at the end of the day was trading at that 1510 level. Now, if this market gets over today's high of 1530, and I've been trying to prep you, that would get you the higher lows that you want in the market. The key is you've got to get over this 1525 level to get higher lows, higher highs if the bulls are going to grab control. Who's controlling the market going home? The bears are. They have control of the market. So no matter what you think about what I'm saying, as a pure chart, I've got a pattern of lower highs, lower lows. The bias is down. The market is caught in between the upper Bollinger Band, which frankly it hasn't hit since the very beginning of September. And then in October, we did get right at the beginning here, as you can see, coming into October 1st, we had that one washout and the market has rebounded from there. In terms of momentum, it's flat. The question is, does all this rhetoric between China and the U.S. do something to the gold market along with the Fed? The Fed minutes tomorrow, the idea the Fed's going to swell its balance sheet some more, the idea that the repo money has got to be put back into the economy, yet the Fed does not call that quantitative easing. I understand it. And by the way, I'm not being facetious. I understand it. They've got to go back and make sure that those monies are there for the repo. You've got a pattern here when you come to GLD, and this is where I'm looking at the market. Why? Why am I looking at this more than the futures? Because the future settlement comes in at 12:30. This finishes up right when the stock market finishes. This had a chance to see everything. Higher lows, higher highs. My analysis is wrong if you take out 140.24. Then I'm back to the drawing board thinking you're stuck in here. Have you broken out in any way? No. You've got to get over 144.12. That's a big resistance point right now. It's about $2.50 higher. GDX also jumped on the bandwagon. It too's got the higher lows and higher highs. Momentum is turned up in this market. This market could be targeting 29.39, and I'm wrong in the bullish idea if the market takes out 27.14. That doesn't mean that as a chartist I'm telling you buy or sell. I'm just telling you what the chart patterns are right here, and when I say I'm wrong, I'm not wrong. The chart would lose the bullish pattern if it gets under 27.14. Gold, silver is another thing that I liked what I was seeing today. Silver market was gaining on gold for certain the last third of the day. You saw gold basically unchanged, silver up about 15 cents most of the time. And as you can see, silver's fighting this battle right here at that 18-day average of closes. And like the gold market, it too was just over this 18-day average right at the end of the day. Was at least on it, maybe just a shade over it. So if you look at this low today, that low's number is 1730.50. This number's low was 1733. Unlike the gold, this cannot get the swing line turning up tomorrow regardless of price. So the battleground's at the 1782. If the market were to take off, one of the resistance points is 1862. And if today's low is taken out as a chartist, I think you destroy the opportunity for anything bullish to be happening right there. In the copper, all I've been looking for, and I think I've said it repeatedly, is I've been looking for the market on a rally to have resistance at the 18-day average of closes because it's been having it all the way through. And today the market down 85. Okay, we've got the swing line up, bullish. The market has stayed under the 18-day average, bias down, and momentum pointing up. This chart doesn't have anything at work for it just yet. In the platinum market, we're still with the lower highs, but now we're starting to develop higher lows. So until you take out, and I'll come to that number, here's 876.80, and this low was 875.60. So that's where I'm getting the higher lows from. I think we're in a pause against that lower Bollinger Band. Let's assume the market decides to resume the downtrend. Getting through the combination of the lower Bollinger Band and the 100-day average is never an easy task. What about stochastics? Are they embedding? Well, if we take a look, this is today's numbers. Both are under 20. Both are under 20 yesterday, and both under 20 the day before. The answer is we're embedded. Therefore, until the red line closes over 20, the bears are probably still sellers in this market. If you lose that, then the 18-day average of closes becomes a potential where the market might want to go back to figure out what to do next. In the palladium market, you can see the big reversal we had today. So this market's rejecting staying underneath the 18-day average of closes, and it has for a long period of time, literally since latter part of August, the last third of August. And again, a test of it came down. You had lost your embedded reading right over here. See it? Right there. When you lose it, often price in the 18-day average or the closest of a key moving average try to make a run at each other. You certainly made the run there, and you just did it again today, and you rejected that number one more time. What we have here is the swing line down, prices over the 18-day average in an overbought condition. In the dollar index, we still have at work higher lows, higher highs. That element is bullish. The bias is up in the market. That element is bullish. What the bulls do not want to see, in my opinion at least, is the market get under 98.30. As long as that doesn't happen, they have momentum, which had been coming down, flattening itself out now. You've got the bias up, the trend up, resistance 99.17. The key is not to get under 98.30. If you do and momentum turns down, you could be coming back into this level. So at least we know the number, we know the support levels, the 18-day average. It should be, in theory, around 98.40, and getting under 98.30 is a problem. So I look at the markets and I say, okay, where do you go with all this? Well, we're going to be writing about it. There's so much to talk about. And I don't want to get into politics. I noticed yesterday I felt that I was getting too political. Not doing that anymore. We'll just talk about what's going on, where it's at. We know the situation in Syria. We know all that's going on. But if you're a grain, a metals trader, this is the exciting time. We're right back where we want to be. Now remember, tomorrow's Yom Kippur as well. That means the holiest of the Jewish holidays. A large element of the Jewish population will not be at work tomorrow. Volume might be a little lighter than normal. Don't be surprised by that. But if you're interested in getting all our information, well then what we invite you to do is go to our website under our free offers. You'll see a listing. I think there's 9 9 or 10 of them. Choose the ones that you think might suit you. You can click here to get to that as well if you're watching me on YouTube, and we'll get it by email right away in your mailbox. I'm Ira Epstein. You have a great day.